On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice and it doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners financial advice provider disclosure statement, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Please engage with us. We love to get feedback, questions, and comments on this material, and if you enjoy it, please rate it, or even better, share it with a friend or colleague. G'day team, hope you're all well. That's another week behind us, so let's talk about some of the key events and developments across financial markets last week. Then let's turn our attention to what's coming up in the week ahead. Global share markets, a much better week last week. The S&P 500 index in the US posted a 0.5% gain last week. That was its first weekly rise in more than a month. We've seen 4 consecutive weekly declines in the US, so it was very good to see some green. The index is still 7.8% below its February peak, although at one point it was down a little more than 10%, so we have seen a little bit of a recovery. Other markets also rebounded. UK shares up 0.2%, Europe was 0.6% higher, and emerging market equities rose 1.1%. Japan was the strongest of all, with the Topix index in Japan up 3.3% last week. The Australian ASX 200 finished the week higher. It was up 1.8%, while the local market bucked the trend. The NZX 50 here in New Zealand fell 1.2% last week. So that was our 5th consecutive weekly decline, which is the longest losing streak on a weekly basis at least since 2023. And the NZX 50 is down 8.7% from its 12-month high, which came very close to the end of last year. We saw a few heavyweight stocks that were down quite sharply last week. Spark falling quite hard, Ryman Healthcare was off a bit, and I think Genesis Energy was the 3rd worst performer in the index last week. Interest rates, the US 10-year Treasury yield finished the week slightly lower, 4.2%, while the local 5-year swap rate was little moved. It finished the week at 3.7%. A piece of good news that sometimes we don't talk about enough, US Treasury bonds and local fixed interest, New Zealand corporate bonds, have both delivered positive returns in 2025. So yes, you've had share markets that are down in the US and here in New Zealand, not everywhere, but in those two regions. But remember that fixed interest and bonds in both of those countries are up. So if you've got a portfolio that has a mixture of fixed income or bonds and shares, then you probably haven't done as bad as some of the headlines would suggest. All right, let's run through some of the key events from last week. Should we start with the Warriors on Friday night against the Roosters? No, we won't. We'll be here all day, but what an epic game. Definitely worth a mention, a real highlight of the weekend so far. But back to markets, there was 3 big central bank meetings, wasn't there? And the big one was the Federal Reserve. As expected, the Fed left its policy rate unchanged, so the upper bound of the Fed funds rate, that was steady at 5.5%, no change there. That's down from a peak of 5.5%. That's what we saw last year. What we did get last week was a new summary of economic projections, which is sort of the forecast set that the Fed releases periodically. The last one came in mid-December, so everyone was very eager to see what things would look like this time, a few months later in March. The Fed did reduce its expectation for economic growth this year. It raised its unemployment forecast slightly, and it increased its inflation forecasts for the year. So PCE inflation, in the Fed's eyes, will increase 2.7% this year. They had 2.5% penciled in earlier. Despite all those changes, the Fed still does see another 0.5% worth of rate cuts this year. So 225 basis point moves pretty much. At the same time, during the press conference, Fed Chair Powell did outline his openness to changing tack if he needed to. So he said, look, if the economy remains strong and if inflation doesn't move lower or sustainably lower towards 2%, we can maintain policy settings for longer. We can keep rates higher for longer. longer. And if the labour market does weaken on the other side of the coin, or inflation were to fall more quickly than expected, we could ease policy accordingly. So he is keeping his options open. Market pricing didn't move dramatically in response to this meeting. Current pricing suggests about a 20% chance of a cut at the next meeting, which is in May, and that increases to almost 90% for the June meeting. So as far as financial markets are concerned, the next move will be down, so we'll see a cut, but June is probably the likely timing, and then after that you'll get another cut sometime in the second half, maybe a third, but that will change as the data and the outlook changes. So that was the Fed, that was the big one. We also had meetings from central banks in Japan and the UK. No change from either of those. So the Bank of Japan will keep increasing interest rates, but there was no move last week. I think the next increase will come in June or July. They're just moving gradually. And as far as the Bank of England goes, they left their policy rate unchanged. It's sitting at 4.5%. They vote on it, so it's 8-1. So not quite unanimous, but almost. Their next move will be a cut, but that's probably May or June, so not dissimilar to the Fed. Here in New Zealand, the highlight was gross domestic product, GDP. And it was better than expected. It increased by more than people were expecting. It rose 0.7% for the quarter. That was ahead of forecast for 0.4%. And I think the Reserve Bank was picking 0.3%. So it was better than what the economists were suggesting, better than what the Reserve Bank expected. And it was much better than what we saw in the previous 3 months. In the September quarter of last year, we saw a 1% decline. So a big uplift from that. So these figures were actually the strongest we've seen in 18 months, and per capita GDP increased for the first time since late 2022 after 8 consecutive quarters of contraction on a per capita basis. So that has been how difficult this recession has been. Does this change the outlook for the Reserve Bank? I don't think it does. The OCR will still be cut by another 25 basis points at the April meeting, and then again at the May meeting, so then you'll be at 3.25% by the middle of the year. Then you might see another cut over the second half of the year, taking us down to 3%, or they might choose to just stay put at 3.25. That is where the debate seems to be at the moment. I think most people agree that we'll get 2 more 25 basis point cuts, one in April, one in May, and then depending on who you ask, some people think that's that, and other people think they'll go down to 3%. And then most economists and financial markets see the OCR rising next year, and that's because these interest rate cuts that we've seen so far, and there's a couple more to come, that is expected to see the economy rebound, and it's supposed to support growth, or it's expected to support growth, I should say. But yeah, that is the point of it. So supposed is probably the appropriate term. So a few more cuts, and then it just flatlines for a little bit. Then it won't be too long before we're actually talking about OCR hikes, if things go according to plan. They might not, but that's where we're at. GDP growth better than expected for the December 2024 quarter. We also had some dairy prices. We got another GDT auction, so prices unchanged from a fortnight earlier. Pretty solid outcome. We'd seen 2 consecutive falls. Prices are still 2 or 3% higher than where they were at the end of last year. They're still back at levels that we last saw in 2022, and the payout of $10 from Fonterra looks pretty much to be locked in. There is a drought in places, Northland, the Waikato, and the Naki, so volumes will be impacted in those regions, and farmers will need to spend a little bit extra on feed and so forth, but in aggregate and looking at the big picture, the agricultural sector is not in bad shape. The housing market, we also got some housing market figures last week. These were from the Real Estate Institute. They covered the month of February, I think it was, wasn't it? So sales volumes up compared to January, down a little bit compared to the same month a year earlier. The days to sell sitting at 55 in Auckland, 54 elsewhere. So not super strong, still a sluggish market, but prices did improve. And you saw the National House Price Index rise 1.4%. That's actually the strongest gain since November 2021, which happened to be the peak of the housing market back then. So a nice monthly gain. National values are up about 4% from the bottom. The bottom came in May 2023. They're still about 15% below that 2021 peak that we saw. So things moving in the right direction in terms of a bit of housing market activity. Right, looking ahead to this week, and on the global front, the key thing for me will be flash PMIs for March, purchasing managers indices, which are activity indicators. These are due early in the week, so we'll get the Australian measure on Monday morning at 11 a.m. And then we'll get the Japanese one that afternoon at 1:30 p.m. And then you'll get the same measures for the UK, for Europe, and for the US overnight, so Monday evening, early hours of Tuesday. Last month, all of these remained in expansionary territory, which is good, but there were some cautionary signs. Australia and Japan improved, but the UK measure slowed, and the European PMI was unchanged. So they're not really getting any better. And the US composite PMI, that actually fell very close to the break-even level of 50. So it was the lowest in almost 18 months, and it was pretty close to showing no change. And some of the indicators that tell us what's coming in the future, like new orders, that weakened sharply in the US. So I think you have got that policy uncertainty that is starting to impact businesses. And this will be one of the first indicators for March that will really tell us some of these tariffs and this nervousness and what you're seeing across financial markets, and the same things that are keeping investors nervous. It'll be interesting to see how nervous they are making businesses in all of those regions. So this will be really interesting on Monday and then overnight that evening. Elsewhere, we will also get PCE inflation in the US. That will be probably the economic highlight in terms of the US specifically. This will cover February, and this is the Fed's preferred inflation measure. So that's why we watch it closely. We watch everything, but inflation is always very important, and this particular inflation measure is very important because it's the one that the Federal Reserve watches closely. So this is out on Friday in the US, so it'll be out Saturday morning New Zealand time. The CPI inflation report, the consumer price index for the same period in the US, was softer than expected. So we'll be watching this release to see if PCE inflation follows that CPI inflation for the month of February. Markets see the headline and the core PCE both rising 0.3%, and that would mean the annual PCE inflation rate at the headline level is unchanged at 2.5%, 2.5%, and that core PCE inflation increases slightly to 2.7%. So still in the mid-twos, but we'll be looking for any change or surprise there. A couple of other things to watch in the US as well. We've got the Conference Board's confidence index. That will be out on Tuesday. That will be interesting because I think a week ago, you might recall, we talked about the University of Michigan survey and how that was much weaker than expected. So we'll be watching this one so that we can sort of compare it. And also in the US, the CBO, the Congressional Budget Office, will publish its federal debt and statutory limit report, as well as its long-term budget outlook. So I think those two things are out on Tuesday and Wednesday respectively, if I'm not mistaken, and I might be mistaken, but that's from memory. Across the Tasman, we'll get the federal budget for 2025-2026. This will be out on Tuesday evening. Usually comes out about 7:30 p.m. Aussie time, so about 9:30 NZ time. If you're super keen, stay up and watch the budget. I probably won't. But it will pave the way for the election in Australia, which must occur on or before the 17th of May, so it's not far away. And we will see a few policy initiatives announced in the budget, as there always is, but this year I think a lot of them will be held back and reserved for that election campaign. And that campaign, I think it's written into law that election campaign has to start within 3 weeks of budget day in an election year. So they'll hold a few things back so that they can campaign on them through that sort of April and May period. Locally, a pretty quiet week. We obviously had GDP last week. We've got a Reserve Bank meeting coming up in April, but this week, this coming week, is a pretty quiet one. ANZ Consumer Confidence for March, I think that's out on Friday. It's really the only notable release. There will be a couple of earnings reports. We've got Synlait, we've got Kathmandu. When are they? I think they are on Monday and Wednesday, respectively. NZ King Salmon as well on Thursday, and internationally, a few companies to watch. BYD in China reporting on Monday, Dollar Tree on Wednesday, on Thursday H&M and Lululemon. So a few things to keep an eye on. And we're obviously heading into the final week of the quarter. We've got this week, and then we'll have the following Monday, and that will be the March quarter. So let's see if we can see any recovery across markets before we close out the March quarter. All right, thanks for listening, team. Always appreciated. We'll talk again soon. Enjoy your week.
For more insights, visit craigsip.com.